Welcome everyone. This is Arpad from Starpath Academy, and today I have a very special guest on. His name is Mario, and he runs the YouTube channel Maneco64. He shares daily market analysis, historical perspectives on the economy, as well as gold and silver. And he's a wealth of information, so please be sure to check out his channel and his excellent content. I will have a link to his YouTube channel in the description. So with that said, thank you, Mario, for coming on to the channel. I always have a really great time talking to you. How are you?
I'm very well, thank you. And thank you for inviting me. I really enjoyed speaking with you when I interviewed you on my channel a couple of months ago. And hopefully you're doing well as well.
Yes, thank you very much. A little bit of cold. Probably the listeners can hear it on my voice, but other than that, we are doing great. Thank you very much. So a lot has happened these last couple of days and weeks. So I thought that it would be a great time to have you on and kind of break things down for us, what is happening in the global markets, the UK and the US markets, as well as the Chinese debacle of whatever is happening there. So with that said, I think we should start with the Fed meeting that has happened this week. It looks like that tapering is on the table now. What is your opinion? Is that even possible, or do you think that will eventually change course again? And could the Fed really raise rates around mid-year or next year? Is that even possible? What is your opinion?
Tapering, basically, and I think Jay Powell even said that yesterday, is not like tightening. They're still going to do QE, but that's if they do taper from November up until the middle of next year. They're still going to be doing the QE. They're just going to decrease the size of the QE. So the balance sheet is still going to increase.
Right.
Yeah. And then eventually, if they let some of the securities that they hold, the bonds, they always maturing. So unless they buy new bonds after the old ones mature, the balance sheet will start running off in the next few years. I personally think, like you said, it's very difficult for them to embark in a major unwinding of the balance sheet, because tapering is not even unwinding. And by the time we get there in November or December or next year, a lot could have happened in the world economy. There's an old saying that I remember when I was in the markets in the 90s and up until 10 years ago, people said when the United States sneezes, the whole world catches a cold. But I've been doing a lot of research on the situation in China right now, Evergrande. And what amazes me about China is that we underestimate China, how big and important it is. And I think the Evergrande situation could be the old adage, when China sneezes now, the whole world suffers. So yeah, I think there's a lot of problems out there. The Fed, the reason they're talking about tapering and raising rates, I think most people in the FOMC expect to raise rates in 2023. It's just trying to please the bond markets, to keep investors aboard, to keep interest rates low. If they were really committed to keeping a sound currency, a sound economy, interest rates would be probably 5-6% right now. They wouldn't be doing QE. But if they start raising rates and unwinding the balance sheet, it could be a huge problem. And even the tapering could be a problem for the markets. And I think the reaction of the stock market since the FOMC, I think it was up over 300 yesterday. The Dow, this morning, it's up again. Is just saying that the markets don't believe in the Fed ever being tough again on monetary policy. The Fed will always be there to save the day. And I think that is a bad thing going forward. That's another how can I say, another reason to believe that eventually the currency will go, because it's very easy to create all this credit, all the reserves to keep the markets juiced up. But we're already seeing, as you can probably see in the US or seeing it here in the UK and Europe, we're paying more for everything. And people think it's because of greedy energy companies or greedy whatever, but it's not. It's payback time for all the money printing and credit creation that we've had for 12 years. And if you want to go further back, for the last 50 years since we went off some semblance of sound money when we had the Bretton Woods gold exchange system, which Nixon ripped apart on August 15th, 1971.
That's very well put. Inflation is on the rise, and it with little or no stops in the way. So you touched on something there which was quite interesting to me, because with the last taper talks that happened, the market did a little bit of a nosedive, and this time it's up 300, 400 points. And I thought, well, is this something that they are shrugging it off, or they are taking everything as good news? But I haven't even thought that maybe the perception management of the Fed is not so strong anymore, that they are figuring out, the market is figuring out that they have painted themselves in the corner. And if that's the case, that's probably the worst outcome, because at that point, the Fed's credible threats or perception management is fading. And with that, as you well put, the currency could be fading. So you just scared me, but very, very correct.
The other thing as well, you said that when there was talk of tapering a few weeks or months ago, the markets keeled over a little bit, and now they've gone up. There is an old saying in the markets, sell the rumor, buy the fact. So it could be a little bit of that as well. But yeah, there's also an old adage about politics that people say 1 week in politics is a very long time, or 1 month. So I think right now the Fed has become more of a PR political agency than a bank. So a lot could happen, and the Fed will reverse everything, just like they reversed everything in 2019. And then threw the kitchen sink at it in March of 2020. So I think that's what the markets are basically saying, that, and it's dangerous. We could see the crack up boom or Katastrophenhause, where people are misled into believing that everything's fine, and they just buy into everything. And it's a dangerous situation.
Very well put. So regarding the Nasdaq Composite, it broke down below its 50-day support level. And I thought, well, sure, it will not be as fast. The bounce back will not be as fast as it was. However, it looks like it can just shrug off Evergrande or in any situation and keep on going as long as the talking heads in the media are out. To me, it seems that this market is running on fumes, or news reports instead of actual earnings, and you know, something that we would have considered even counting a couple of years back. Now everything is just controlled through the news and through the Fed and through these political maneuverings. What is your take on the markets today? Should people look at this caution? Should they be caution? Is it something to buy the dip? What is your take? What is your security measure if the market would take a deep nosedive?
Well, I've been following the markets for 30 years. And when I worked in the city of London, which is like the Wall Street equivalent in the UK, I was more in the bond markets where interest rates are set. But the stock market as well, I follow it. And to be honest, I try to stay away from the stock market as much as possible. So I could care less if the stock market drops 50, 30% because I'm basically mostly out of it. I always tell people before you invest, you need to invest in yourself, in your family, maybe close family as well, immediate family, because that's what it is. Investing is just trying to save some capital and maybe starting a project. But what we see today is just pure speculation. You can see in all these, they call it social investing now. You can follow other investors and do what they're doing.
Yes.
I think that's just such a symptom of mania. And but as I said, though, the stock market could keep going up, and it doesn't mean the economy is doing well. I remember in Brazil in the 80s when we had a lot of inflation and a lot of poverty. The middle class, the working class were doing really badly. The Brazilian index was at all-time highs. We saw in Venezuela a few years ago during the hyperinflation, the Caracas Stock Exchange was I think one year it was the best performing stock exchange. But eventually, I think what the currency will divulge is that the emperor has no clothes, that these values are actually fictitious. They're only ephemeral wealth. And we could see a huge haircut, be it through nominal prices, like we dropped from 35,000 in the Dow to like 10,000, or be it through the collapse of the currency or a big drop versus gold and silver, because I think all fiat currencies will drop versus gold and silver. So we could see gold and silver go up in multiples, and the Dow maybe be at 35, 36, 37. And everyone thinks that everything looks good, but the people like you and me who study money and currencies, we will know that that things are not great. And I think that's like the Venezuela moment. So I would basically, if I know a lot of people are in the stock market because of the 401ks and pension funds and companies that have pension programs. You put money with them, they invest in the bond market, stock market. I personally, if I was in that situation, and I was like in the 90s and early 2000s, I'd try to have as little exposure, increase my exposure to those as little as possible, and try to get some money out and start accumulating some physical gold and silver as insurance. I would also think that paying off your debts is very important, because even with interest rates really low, like here in the UK, for example, I just read this week that one of the mortgage providers, they issued the lowest paying mortgage ever. I think is 0.79%.
Wow.
But and that might sound great. Oh, house prices will keep going up, but we're seeing now with the energy crisis. I just went up to a shop near my house before the interview to buy something, and I saw the newspaper saying that bills could go up. Electricity bills, utility bills could go up by £400 this winter. We've got taxes going up, were announced a few weeks ago. The national insurance tax is going up. That's going to hurt the people at the bottom, the middle class, the working class. So you could see interest rates remain low. And despite that, if people have a hard time buying food, paying for their electricity, gas, and everything else, they might not be able to pay their mortgage, even if rates stay low. And can you imagine if interest rates start rising? Then it's a real cocktail for disaster. And that's why the Fed and also the Bank of England met today, and they said they expect inflation to go, or they call it CPI, to go up above 4% this year, but then come back down next year. So they're going to keep rates low because they can't raise rates.
No,
And so That's the situation.
Right. And you touched on some very good points here, because just because the stock market or sort of paper money or some indices on some screens that you might think you own go up, 10%, 5%, or even 20%, does it really matter if your actual cost of living is going up, some things doubling in price in a matter of months? Does it even matter what the paper is doing if the real cost in the real life is actually being raised much faster, right? So you also touched on gold and silver, and that has been something very important for my family, just to always yearning for it when we couldn't afford it back in communism. And after that, it always kind of was a point in time that we remembered how good would have been to have it, right? And I have these stories um, with my father, and talking about silver and that sort of stuff. Of course, back then we didn't have any at all, but we were always talking about how good it would be to have it. However, gold and silver have been stuck in a range lately, or even a very short-term downtrend. Do you think is this clear sign of manipulation going on, or by the bullion banks, or something else, or is it just a naturally lagging behind other commodities?
I would say it's a bit of both. There is a bit of manipulation by the bullion banks, and the bullion banks, they're agents for the central banks and the governments. Uh, they're trying to keep gold and silver as low as possible. Not only low, but they're trying to, because a rising gold and silver price is a signal to the general public of trouble for the currency. And someone might say, oh, well, gold and silver are not that important anymore. But I think it is. It's in the human psyche. When they see gold and silver going up a lot, people wonder about the currency still, about the money. And that's what they don't want. But I still think there's a lot of physical demands. I bought some silver on Saturday this week online, and I used another bullion dealer, the bullion dealer that I recommend for people who ask me where to buy is Gold Investments. But I tried another one, and I haven't received it's just 10 ounces of silver, and I haven't received it. It's Thursday today. I contacted the lady there today online, and I said, how come I haven't received my coins? And she said, well, we're very busy. And I said, are you seeing more sellers because the market is going down? It seems like everyone's selling. She said, oh no, absolutely not. Everyone's buying. So yeah, there's a little bit of manipulation. But the other thing we have to realize, looking back in the 70s, for example, gold went up to like 200 by 1975. And then for a year and a half or two, it corrected down to 100, and it only went back above 200 around 1977, 78. And that was at the heights of the stagflation. And if you go back to 2015, end of 2015, gold bottomed around 1,045.
Yeah, I remember that one.
We're $700 higher now. But at the time, I think right now, the CRB index, which is the other commodities that have been doing well, it's only going back to the level that it was at that time, maybe a little higher. So yeah, things, they don't move perfectly all together. And last year, of course, gold went from 1,450 to 2,000. And I think it was discounting the inflation, you see. That's what it does, discounting the price rises. So, but I think there is manipulation, because if you look at things like the national debt or the money supply, the price of gold usually follows that, and it's quite out of whack right now. But yeah, that's what they want. They want people worried to think that gold and silver are risky, that they're just commodities. But I look at it as insurance, and it is frustrating, but in the long term, I think it will more than pay off. And it's not something that I look at as like a Bitcoin or an altcoin to go 10x or 20x, even though it could become something really special during a currency collapse. And even if we don't have a currency collapse, I think there'll still be good places, safe places outside the system. Because the other thing about having physical gold and silver, there's no counterparty risk. You don't have
Exactly.
of course, there's risk that you get burgled, or you lose your coins, or you hold it for so long and you get political upheaval like we're getting many places now. You hide it, and then let's say you get hit by a car, you die, and your family doesn't know where it was. There are those risks, but and it's also moral for me, because I don't want to finance the government and the banking sector. And by having money or fiat currency in the bank, you're financing them, because legally it's an unsecured loan, and you
Right.
don't even own your money anymore if it's in the bank.
That's very well put. And we found that out the hard way, back in Romania. Nothing you really own. Once it's if you're not in your physical possession and you can stand in front of it and defend it, it's not really yours. It's just a promise on a promise, in best case. So, and I have seen gold rise multiple of its value, in Romanian currency. So that is definitely wouldn't be new to me, right? And where we'll put. And I just see this as an opportunity for accumulation. That's how I see it right now. And I did some introspection regarding how I see Bitcoin and some other cryptos when they are falling, and how I look at precious metals when they are falling. And I tend to panic when cryptos are falling, but I tend to be happy when gold and silver is falling, because I just see it as a good opportunity, because I'm not planning to sell it at all. It's more of like something for multi-generational wealth building, right? It has been here and it will be here for a very long time. Now, one more thing I want to touch on is the Evergrande debacle, the Evergrande situation. I tried to look at it from many different angles. Even take a look at what's going on in the media, how they are trying to describe it. Sometimes looking at that also helps me, just at least knowing what they are trying to sell us. And then I turn to other people as well to kind of break it down for me. And I think you always break down, complex topics. And I would like to know, what is your take on it? How big is that Chinese elephant in the room? Because now there are two, at least, not just the Fed, but also China.
Yeah, and also the debt ceiling situation in the U.S. That's another big elephant. But
Right.
I've done a bit of research, quite a bit of reading the last few weeks about Evergrande. I'd never heard of it, but it's the biggest. Well, it used to be the biggest property developer in China. I think they started out in the late '90s, and I mean, China is an amazing story. I think Evergrande is based in Shenzhen, which is in the south near Hong Kong and Guangzhou. And Shenzhen, I think, was a town of 30,000, 35,000 people, and now it's like millions. And so China has grown a lot. And from what I've read, after the '08 crisis, housing was in trouble in China, and the government pumped it up, provided credit. And what I think is happening with Evergrande is that the Chinese government has probably looked at the West, it's looked at the subprime crisis, real estate bubble of '08, and they were a bit concerned a few years ago that things are we're overheating in China. So I think this is a policy of the Chinese government to tamp down speculation. I think they now say that a house, there was a, I think 2016, they said a house is somewhere to live in, not to speculate. So I think that's what's happening. And Evergrande is, I was listening to some reporters from Bloomberg talking about it today, and they have about 500 billion yuan that they owe to Chinese banks, and half of that, so 250 billion, maybe more, comes due next year. That's about $40 billion. It doesn't sound much, but the thing is, the whole financial system around the world is so leveraged these days. There's so much interconnectivity that it could spark trouble. It's very difficult to say. And there are also their obligations to foreign investors. I think their dollar bonds are about $8 billion, which doesn't seem like much. But what that's doing now, it's affecting all the other junk bonds, not just Evergrande's, which is like $400 billion throughout Asia. So my analogy, I was trying to think before coming on with you, my analogy for Evergrande and the Chinese real estate boom, and this real estate boom is quite impressive because they've brought hundreds of millions of people from the countryside to the cities, especially in the south of China, near Hong Kong there, Guangzhou, Shenzhen, and Shanghai is further north, but that's a good thing. But what's been happening is that a lot of people have been buying second homes, third homes, purely as speculation. But what could happen, I think, is that it could reverberate throughout the economy there. But the analogy, back to the analogy, I forgot, I went off topic, is that the Chinese real estate market became like a freight train going very fast on a mountainside, and below there's the Chinese economy, the world economy, and the Chinese authorities are concerned that it could derail and drop and really damage the whole Chinese economy, the world economy. So I think they're trying to slow it down, but it's a very dangerous situation, I think. Yes, there are a lot of people saying, oh, it's the next Lehman, and a lot of people are saying, no, it's not the next Lehman. But I don't know if you ever heard of Credit Anstalt. That was an Austrian bank that I think went bust in the early 30s. And most of the creditors there were a lot of big German banks, European banks, and the people who lent to the German and European banks were American banks. So it all became a domino effect. It led to the Great Britain going off the gold standard in 1931, and then it led to the to basically the almost collapse of the U.S. banking system in 1933 when Roosevelt took power in March. He had to declare a bank holiday. That stemmed from that Credit Anstalt failure. And Credit Anstalt wasn't a huge bank, but the ripple effect was huge. So yeah, maybe it could be the next Credit Anstalt Evergrande, but I don't know. It's really hard to say. I've only started looking into it, and I'm sure there are people out there who know much more than I do. But looking at that bigger picture, I think there is a danger that it could be a problem worldwide.
Very well put. So I totally agree. The snowball that starts the avalanche doesn't have to be too big, right? If everything else is already just a house of cards, right? That first card doesn't have to be too big to bring the whole system down, because it will just it will have a ripple effect. Now, of course, we'll see what happens in the next couple of weeks, but
yeah, today was supposed to.
Thank you for, like, I love this historical viewpoint that you bring, with these historical examples. I think the viewers can learn so much from this. Thank you. Go ahead. You were saying something.
Oh yeah, I was saying that. Yeah, I think history is always good to look at because it gives us an idea of what could happen. It doesn't necessarily mean it's going to be exactly the same. But as for Evergrande today, I think they have about 83.5 million of interest due on their foreign dollar bonds, and I don't think they've paid it off. They do have like a 1 month grace period. I think from what I've read, the interest was supposed to be paid by 5 p.m. Hong Kong time, and we're past that. Hong Kong is 7 hours ahead, so it's like midnight in Hong Kong. So yeah, that is a problem there. They do have a 1 month grace period, but like you said, it's like an avalanche. When it starts, it's just a little flake, or the butterfly effect as well.
Yeah. Very well. But so now that you mention it, I will ask, what do you think about the US debt ceiling? Will it be raised? Do you think just another story that will hit and the market will shrug it off because we are used to raising the ceiling again and again? Or do you think this time is a bit different? What is your take on it?
Well, they could do a couple of things. They could raise it, or they could suspend it. Just basically say, and we just keep spending. But the problem is how they go about it, how long they keep things uncertain. In 2011, I think they resolved the crisis in the last minute, but it still had a big impact. The U.S. Treasury credit was downgraded by Standard & Poor's from AAA to I think AA plus. And I think right now the U.S. Treasury is using measures outside its normal operations, like taking money from like public pensions and other things to keep the government running. And I think they've got to the middle of October when they run out of money. And I think from what I've been reading, the Democrats and the Republicans are kind of playing Russian roulette, so to speak. I don't know. I think the Democrats could pass the budget themselves, but they don't want to do it themselves and raise the debt ceiling, and everything implodes and they're going to be blamed on. And the Republicans don't want to be part of it, so because they don't want to be involved. So it's going to be hard. It's going to be a tough situation. I think most people think eventually it will be solved, as it usually is. But in the interim, foreign investors especially, could lose faith and confidence in how the U.S. Government, the Congress, run their house, and they could dump the dollar. Who knows? So I don't think we are out of the woods of that situation. And coupled with what's happening in China, coupled with what's happening in Europe as well, with energy prices going through the roof, it could be a really interesting next few weeks or months.
Yeah, definitely. There's more to unpack there. I mean, I think you did a really good job because again, with everything being so interconnected, there's so many strings that can break, right? That we cannot even possibly predict what could happen. But I think you drew a very nice map of how things tie together. So just one more thing, if you have a couple of more minutes, is that really with rolling blackouts in the UK, I just saw one of your last videos. How is that even possible in such an advanced country, advanced economy? It's not like a hurricane hit or something like that. How come this is being now normalized in the UK, of all countries, that you can expect rolling blackouts or gas shortages or BP announcing something horrible? What is going on? And what is more that could come?
Well, the rolling blackouts are a possibility. They happened here in the 70s. And but I think it's a symptom that we're even talking about, a symptom of the fact that the UK economy, the US economy, European economy, they've become so financialized based on credit, borrowing, that we've neglected the infrastructure of the country. We've neglected real wealth. And it's also coupled a bit with government policy, because in 2018, and it's the mentality as well that people making profits is a bad thing. Theresa May, who is a conservative prime minister, she passed, under her administration, they passed a law that capped prices for energy companies. So that has been the whole problem. They've raised the cap recently, but we know that when you suppress prices, producers, if they're not making a profit, they're not going to sell anything, because what's the point if you're going to lose money to create a product? And I think that's part of the problem. And the other thing is to do with this this climate change agenda, net carbon, net zero carbon. They're trying to push not only the UK, all other countries into renewables. And
you know how well that worked out for Texas.
Yeah,
right?
that's right. And the other thing as well is that some people here say, oh, they should nationalize everything because they privatized it. But we don't really have a private energy sector if the government is capping prices. And the other thing, there's a lot of these small energy providers, they call it challenger companies, and they've come into the market in the last few years, and they've offered really good deals to consumers. And I never bought into it. I just kept my old, and probably because I don't have any debt, so I don't have to worry about a mortgage, but many people do. And now we're seeing a lot of these companies are going under. 7 of them have gone under already. And I think the bills for everything is going to go up. But yeah, it can happen here. It can happen in the US. And we are supposedly advanced countries. But I think, yeah, the major take for me is that we're too worried about money and credit. It's the Keynesian mentality. They always talk about consumption. They never talk about production. And they think that we can live in a world where everything is like created out of thin air, and it's coming home to roost, I think.
Either we go back to reality or we will be forced back to reality.
Yeah, I think the latter is going to be what happens.
Well, thank you very much for coming on. I had a great pleasure. Is there anything that you would like to tell to our viewers?
Try to switch off from mainstream news, from what politicians and economists tell you, and try to think for yourself a bit more, and try to think what makes sense to you, right? Because the word economy comes from the Greek of good housekeeping. So I think that's the most important thing.
Amazing. Thank you very much, everyone. Go and check his channel out. You'll get more awesome content like this, and be sure to hit the like button, subscribe, go to Maneco 64 and subscribe there as well. Thank you very much.